Good afternoon and welcome to another VSA Capital Technology and Transitional Energy podcast. This afternoon with myself, Phil Smith, and Andrew Monk is away on business today. So with me today is David Scriven, who's our head of institutional sales. Good afternoon, David, and welcome.
Good afternoon, Phil. So it's great to be on to the podcast today. I guess there'll be no surprises when I say that our dear leader, guess where he is? Could begin with C and end in L, but I'll leave the audience to guess. Anyways, would you like me to crack on and talk a little bit about markets, which is by no means an easy thing?
David, I think we'd appreciate your highly experienced view on what exactly is happening in the UK markets this week.
Well, I think that's I'm going to default to a US comment there, but it's really challenging times would be an underestimate. But do keep in mind those wise old words of Mr. Warren Buffett. It is wise for investors to be fearful when others are greedy, and greedy when others are fearful. So kind of, when I look at the VIX index over the last year or so, over this year, we're registering about 32. The average is 24 and the high is 39. So that kind of sort of sets you a bit where we are in terms of sentiment measures. But looking more on a sort of a positive angle, what's been relatively outperforming in our world that we're looking at today. And if I look at a sort of a benchmark for a collection of stocks, i.e. within an ETF umbrella, cybersecurity, AI, battery value chain, and clean energy have been doing relatively better. So those are some of the areas that you might want to look at and see what the holdings are that have been doing better than others in the marketplace. And how about this? First Solar is really not far off its 5-year high. I mean, look at the share price; it's done, mightily well. And then talking of ones that now, of course, the American market hasn't quite opened yet, but there's an expectation looking out for Micron's Q4, and there's a caution around pricing pressures, weak PC demand, and weakening iPhone demand, and that was kind of supported somewhat by commentary from Apple, which I think you'll talk about a little bit later on, backing off on plans to increase the new iPhone output. I noticed this morning that Bank of America has downgraded them from a buy to hold. I think it's pretty rare for Bank of America to do that on consumer spending cooling across regions. And you asked about the UK, and it is really challenging out there with the market losing faith in the budget that we've had announced, and the Conservative Party, I guess, reiterating their commitment to that. And of course, the Bank of England's move was to address the symptoms of what's happened and not the cause. So, those are the backdrops that we have at the moment. But let's have a look at your wise words on some of the companies and what's been going on, because there have been some placings. So kindly shed some light on that, sir.
Thank you very much for that, David. Very insightful. I mean, a few things that caught my eye, I must admit, this week. And number one is an IPO, and that was the IPO of Porsche. So good news for those of you lucky to own Porsches if you got the shares, because the IPO was listed. It's finally listed today, but the shares were priced at the top end of the announced the night's range pricing, and closed at 82.5 euros. So I've got to say that was very, very encouraging to see. The IPO is expected to generate about 19.5 billion euros. This is from Icon Data. So quite encouraging in the automotive sector. There's something else in the automotive sector that caught my eye, and I'll talk about this sector because it's a great big driver for tech. Ultimately for EVs, but all those the electronic systems that go in cars. And this was an announcement. This was from Toyota. and this was on Reuters, and they are saying that that their vehicle production grew at a record pace in August. Now, this sector's been absolutely battered through COVID, difficulties in component supply, and that really has hampered production globally on auto. But they're seeing improvements there. And it was interesting to see that the saying output increased mainly overseas in August, with domestic production up 5.6% year on year, but the overseas production up by 65%. But quite, mildly encouraging from a component supply point of view for the automotive industry. So that caught my eye. And carrying on the theme of automotive, is Surface Transforms, who are UK listed. The ticker is SCEU, 85 million market cap, and they've announced a placing now. Surface Transform, they design and develop carbon ceramic products, mainly for the brakes market in the UK, Europe, and the US. So they offer carbon ceramic brake kits, brake disc assemblies, and they have conditionally raised £16 million, a price of 40p per share. It's a 40% discount to recent historic prices, and they're also doing an open offer as well, I see, to raise 3 million. What caught my eye on this is, not only raising that amount of money in the current markets, but also they have pretty significant expansion plans for their manufacturing in the UK, and they are saying that they've won some pretty large OEM contracts, and looks like they're building out their factories accordingly. So that's good for the UK economy, good for UK jobs, and actually that's very good to see. So that's I caught that one. I also see another placing, David, and this is from LoopUp Group. They provide hybrid communications via the cloud, and they have placed, by the looks of it, they've raised £3.5 million. In fact, this is a planned placing that they've announced. So another placing going ahead there on the markets. And I better quickly, while we're in here, because I've not mentioned, we'll get back onto tech in a minute, sort of transitional energy space. I mean, I ought to mention that our client, flow battery client, Infinity Energy Systems, IES is the ticker. We talked about this one a lot in the past. It's flow battery tech for grid storage. The tickers, it's IES, market cap's 34 million, but they had interim results today. And I thought the share price has really suffered, and it's been very, very similar for a lot of earlier stage tech involved in renewables. Has been, because it takes a lot of time to develop innovative technologies, and theirs isn't. It takes an awful lot of funding to do that. It does require a lot of patience. But they had interims, and what was, I must admit, from my perspective, covering it as an analyst, is that one of their main projects was Yatlamalka Energy in Australia had been delayed for planning reasons, but that's now going ahead, and that will be a material contributor to their revenue. And I know you were looking at this one as well, David, weren't you? What were your thoughts?
Yeah, no, and I really agree with you on that, because there's been a little bit of uncertainty, so it's good to see the sites confirmed. And then there were some positives in the sense that I noted in the release that they're highlighting that shipping costs are coming down, the vanadium price coming down. So that's something that's been working in the opposite direction for them. So it's encouraging, I think, to see that.
Yeah, it definitely was. So that's Infinity Energy Systems. Getting just quickly back onto the subject of technology. I mean, I read the news on Apple. That is really interesting, and don't seem to have sort of more said that potentially. This was Bloomberg, I think, have come out with this story, and apparently, Apple supposedly telling suppliers to curtail efforts to increase assembly of the iPhone 14, their new phone. But we will see what happens there. Wait to see how that story evolves going ahead. On getting back to UK tech, another bid for a UK listed company. Tech company. This time it's AttractQ. That's ATTRAQT is the spelling right one. Ticker is ATQT. Shares were 17.5p. I haven't checked them this morning, today. It's 35 million market cap. And they provide software for e-commerce, they say e-commerce product discovery solutions, search, merchandising, personalization, everything that attracts you to kind of websites and products is they're in that space. In terms of recommendations for e-commerce products. Anyway, so this company has received a bid from Aegean Bidco Limited. They're wholly owned by Crown Peak Holdings. And just going down the details, the acquisition values entire planned issue share capital Attract Group at £63.2 million. So that's getting towards double the market cap that was. So we will watch that as it evolves. And just for interest, that £63.2 million, the company had its interim results. The revenue was up. This was a lot earlier than this bid announcement, but the last interim results, the revenue was up 9%, 12.2 million, adjusted EBITDA 0.2 million, and loss before tax 2.2. So, loss-making company, they're paying £63 million for it. Therein lies, it's SaaS software. So there we go. So that was very interesting to see. Another company, David, that you may know, because you and I have been in the market for a very long time, is FW Thorpe, TFW. And they make lighting, very advanced lighting products. Come across them before, David?
I haven't actually, but fill me in more.
I shall enlighten you. No pun intended.
Exactly.
Yeah. So they do. FW Thorpe is commercial light. It's professional light. Well, it's a professional lighting products, right? So this is all for. It's all for business, industrial markets, business markets. And they have announced an acquisition, right? So they're acquiring 80% of the share capital of Schal LED lighting company in Germany, who provides into what they describe as intelligent energy saving lighting products, very, very relevant now and going ahead for the industrial and logistics sector. So I can see this one. If you look at the logistics sector, you've got these massive sheds and hub sites use loads of lighting. So, intelligent lighting is lighting that you can smartly control. It's LED based, so it uses less current, less power. So, big sort of end markets for lighting. And they're paying 14.6 million euros for this acquisition. And the company that they're acquiring a turnover of 15.9 million euros and EBITDA of 2.8 million euros. It looks like don't know all the details, but they might have paid quite a reasonable price for that. Something else that investors need to look at with Thorpe, which is interesting. This company's been around. I think it was originally established in 1936. So it has got what we call legs and longevity and can survive in all different has survived through a lot of different market conditions. Their last interims, the revenue was 63.5 million, operating profit 8.8 million, and profit before tax of 8.5 million. Looks like they paid out up their interim dividends at the time of these interim results, and also paid a special dividend as well. So FW Thorpe, not one that we've talked about before, but I think worth investors taking a look at.
Definitely with a special dividend and everything. That's very encouraging.
Yeah, there we go. So just finally to end off on me in terms of sort of company news that's caught my eye this week is a little company called Crossword Cyber Security. Ticker is CCS. And they have announced interims for the period ending 30th of June, and their revenue grew by 85% to 1.5 million. And they have been making a number of acquisitions. They said that they acquired a company called Threat Status Limited during this financial period. And post-period in September 2022 completed an oversubscribed 3.6 million fundraise. So there we go. So today, we've looked at a number of fundraisers happening in the market, acquisition that's occurring in the markets, a big IPO in the markets. So life in the old dog yet, despite the economic news, and clearly investors are looking ahead.
Yeah, no, absolutely. And as I sort of mentioned right at the beginning with the ETF, cyber security was one, so that sort of fits in here with crossword. And one intuitively notes from your interesting observations on Porsche, of course, that it's a sign that buyers are comfortable going into luxury brands. So you got to sort of kind of stand out here at the moment to be able to get these things done. But at least it shows businesses are successfully doing that.
Yeah, absolutely. And as I say, they are looking ahead, and it is at times like these, and when valuations are low, and the market's under pressure, that you start to look for opportunities. And you can see that here that indeed institutional investors appear to be doing that. So there. Good note to end on, David. It's been an absolute pleasure having you on the podcast. If our listeners have got any questions at all, ideas and suggestions for us, we'd always be delighted to receive them. And we look forward to chatting again next week. Thank you, David.
Thank you.